Good morning, good afternoon, good day. Welcome to my midweek market meeting, 5th August 2021. I usually carry out this meeting on Wednesday. Yesterday I was outside and the timing was not right to take the session, so I'm conducting it today. I am Sagar Nandi, retired IT professional, swing trading stocks using Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live stock and market analysis at my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems for my trading. They run on the underlying TradeStation and Metastock platforms. I use them for technical analysis, fundamental analysis, seasonality analysis, as well as sector industry rotation analysis. That was the last slide. Let's continue with the live system. As usual, having a look at the global markets, starting with Australian index. And today I am using all ordinaries.aord, not AXJO. You could use both because Q Global derives the data from Refinitiv. You have access to all the global symbols and certainly all the USA symbols. So this is AORD. It was moving sideways for a number of days and then it broke out, retested the top of the breakout and then went up again. So it is in a confirmed uptrend once again, not in a sideways move anymore, in an uptrend, but it is too close to the upper boundary to take a new long trade. In the last couple of webinars, we saw that the markets, global markets, most of them were moving sideways. Let's see if that changes this week. For Australia, it has changed. It is back to being in an uptrend. Japanese index Topix. Topix is continuing to move inside a range bound by resistance and support trend line both in daily and weekly, continuing to be sideways. China CSI 300 index. CSI 300 broke down below the range at this point due to increased regulation, tried to go up and stopped at the lower edge of the sideways range. Yesterday, not yesterday, this today. Today's China market is closed. Today it has an indecisive shape candle. If price can go down from here, we may look for a trend following short setup. UK's FTSE index. This is continuing to move sideways. And lastly, India's Nifty 50. Very much similar to Australia. It was moving sideways for a while and now it broke out above the upper boundary. So this is not a point we would like to buy, but it is back to being in a confirmed uptrend. It is also probably continuing to be the strongest of the global markets. So we have a mixed picture in the global markets. Two of the markets, Australia, India, back in uptrend. Japanese market and UK market are in sideways range, and Chinese market broke down, didn't recover, it may give a trend following short setup next. Mixed picture. Neither uptrending for all of them, nor downtrending, nor sideways for all of them. What about the USA market? For that, let's use the weekly, daily 3 chart template, starting with DIA. If you followed me in my previous webinars, you know on this day, when DIA made an intraday all-time high, I shorted it using long put verticals. Then I explained how I had profit loss. It was flip-flopping as price was almost not changing, gradually coming down but not changing really much. In spite of having the put vertical, the PNL was quite volatile. On the entry day, I had 10% loss. Next day, I closed the day with about 17 to 20% profit. That was this day. Next day, my profit increased. 2 days ago, I had a loss of about 20%, and yesterday I had a profit of about 20%, about 17 to 20% profit. I saw that DIA is at the trend line support in weekly. The PNL was flip-flopping, and I had covered a lot more than the risk distance because my entry was right at the top using intraday chart. My risk was very narrow, stop loss was very small, and yesterday near the low of the day I had much more reward than the risk taken in the trade. And because the market was flip-flopping, DIA itself was up down, it has weekly trendline support, I decided to book the profit in the DIA long put vertical trend at about 17 to 20% profit. Right now it is back in a sideways range. I could catch the very top effectively using intraday fine-tune chart. It is back in the range. I would like to continue to hold the short trade except that there is a trend line support in weekly. That's why I decided to close the trade. Is not very far from the previous all-time high at the upper edge of the sideways range. What about SPY? Displayed bearish headwind multiple times in daily, one time in weekly. The two weekly bars this week and previous week are doji shape. Had a bear release in the previous week. This week has an indecision indication. Very close to the previous all-time high. It is in a clear uptrend, not in a sideways range. It has trendline support but no trendline resistance. It's not inside a box also. It is going up, but it is significantly above the previous swing low. And for last 2 weeks, we can see that from the weekly candles, it is almost not moving. So I would not like to buy now in SPY. Even if it comes down, there is a trend line support in daily and there is a support in weekly also, so I'm not going to short as well. In an uptrend, but not in a position where I would like to buy. And this situation is making swing trading a bit difficult. This flip-flopping and sideways move. We may wait for a swing low like it happened at this point when it came to the yellow direction line, probably came to the trend line support also. We may wait for such opportunities. We are not able to take a swing trade as easily nowadays as we could do couple of months earlier. Neither in the long direction and not in the short direction. Market is still in an uptrend for the most part. Nasdaq ETF QQQ, very much in an uptrend in both weekly and daily. Also displayed multiple bearish headwinds. However, has trend line support very close to yesterday's price. So I'm not going to try to short it. If you look at the weekly candles for last 2 weeks, it is indecisive shape. This last 2 weeks, in fact 3 weeks in a row, price is not changing on the closing basis. That is making swing trading difficult. And lastly, IWM. I showed in the, I think the last webinar, that after the move up from the swing low, after this candle, all the subsequent candles were indecision candles, indecisive shape candles. And then it came down from the yellow direction line. As of yesterday's close, we have a bearish flow, but the weekly has trend line support and weekly backdrop is not magenta. If the weekly backdrop was magenta, then yesterday's close could give us a go with flow trend following short setup, but that is not there. This is the only market ETF that is in a downtrend with lower low, lower high. So if at all we are going to short any of the market ETFs, that will be IWM. However, there is no Q short setup right now. And if the other three market ETFs continue to be strong, we may not take a short trade in IWM. The other three ETFs may pull IWM back up before it hits the profit target. But if the other market ETFs show weakness today, then there may be an opportunity to short IWM using intraday fine-tune chart. Other than IWM, the other three market ETFs are making swing trading profitably difficult in last couple of days because market is not moving much, and you may wait for a proper swing high or swing low for the market ETFs to look for swing trades in individual stocks. What about internals? Q global market breadth. Let's see how the mega caps are doing. This is the Q global custom index mega cap top 20. Mega cap top 20 custom index displayed bearish headwind at the very top, and then it sharply dropped and found support right at the trendline support. That is how you are able to effectively use the Q signals. At bearish headwind point, you are cautious if you had long positions, or you could look for short trades, and when it came to trendline support, you could book profit in those short trades, and you could also look for a bounce up kind of long trade. Mega cap top 20 itself is not tradable. You could look into the constituent stocks to see if such a bounce trade is coming now. Overall, it is still in an uptrend. If we want to look at the weekly picture using the backdrop template, that is also in an uptrend, has multiple trend line support, displayed a bearish headwind couple of weeks ago, then price came down right to the weekly trend line support and stopped there. These trend line supports and resistances, memory lines, they work pretty well, and I use them as support to look for buy setups and also as resistance to look for short setup. If we want to look at the composite, see how are Nasdaq and NYSE doing relative to each other. This is the Q Global Market Breadth for Nasdaq NYSE. The yellow line, percentage of stocks above 50-day moving average. For Nasdaq, it is at around 31%. For NYSE, it is around 45%. This I showed in the previous webinars also. Though QQQ had been super strong, strongest of the market ETFs, Nasdaq as a whole is in fact weaker than NYSE, shown by the percentage levels of the yellow lines. Overall, both for Nasdaq and NYSE, the yellow lines are coming down. They are below the average line and they are also below the 50% level. So from all those respects, under the hood, market is continuing to show the weakness. And in the last webinar, I showed the appearance of bearish divergence that is seen better using the weekly intervals. And you can see though QQQ is going up, making new all-time highs, the advanced decline has come down and turned negative for Nasdaq and also for NYSE. The same is true for up-down volume also. Not only they did come down, they also turned negative. So this is showing a very clear divergence in internals, and that is one reason I am reluctant to buy stocks at the market top. The advanced decline and up-down volume, they show the weakness at the market top before the market ETFs turn down in 100% of cases so far. So that's why I keep an eye on them when they are showing bearish divergence. I am cautious and don't like to buy stocks at the market top. We'll see if the divergence leads to a significant drop. No significant drop has happened without a big distribution count, and those who follow Hindenburg signal, they also know no significant drop has happened without the bearish Hindenburg appearing. We can read those from the market breadth total view that combines the insight from the two composites and the four major indices S&P 1500, 500, Nasdaq 100 and Dow Jones Industrials. Everything combined into a single chart. The yellow line shows that it is below 50% line, coming down below average line. So overall, from total view perspective also, market is weak under the hood. The white line is also starting to roll over. That is the percentage of stocks above 200 MA. That was holding on to the 80% level for a long time, but now the white line, percentage of stocks above 200 MA, is also rolling over, coming down with lower high, lower low. That is showing further weakness under the hood. Is there any distribution count? Yes. Yesterday there is a distribution count of 1. It's in orange color. The significant distribution counts are at least 2 or more. So we don't have a very large distribution count. Yesterday's distribution count came from Dow Jones Industrials. Isn't it nice that I could catch the top of dia, take a very short trade, and when the distribution count came, I actually booked my profit. Distribution count of 1, not 2 or more, and there is no Hindenburg. So I am continuing to have the view that market may not drop sharply and suddenly, because it has never done that before. Market has never before dropped sharply suddenly without a large distribution count or without a Hindenburg. They are not present yet. What kind of stocks are in favor now? That's again showing the flip-flop. Flip-flop seems to be there everywhere. We could see that in the market ETF charts. We could see that from the type of stock that is in favor. If we look at the magenta line, growth versus value, it was declining, moving sideways. Declining means growth was doing poorly, growth was doing equally well as value. Then it was going up, growth was doing better, came down for a couple of days, and yesterday it in fact tilted up again. So for yesterday at least, growth stocks did better than value stocks. Doesn't mean growth stocks went up, but they did better than value stocks. Yesterday was a down day for the overall market, but growth did better. That is also showing the flip-flop. And if we look at the performance of small cap versus large cap, that is continuing to decline. So small cap is doing poorly, still has lower high, lower low. If it tilts up, then that may be a time to look for buying small cap stocks, but right now it is continuing to go down, and that is in sync with what we saw in the market ETFs. IWM, the small cap ETF, being the weakest one, continuing to be the weakest one, and that is in sync with the small cap versus large cap line tilting down. So we have some weakness in the market when we look at the market breadth, specifically from the yellow line coming down, white line coming down, but not enough weakness in terms of distribution count or Hindenburg to fear a sharp and sudden drop in the market. At the same time, as I mentioned, the flip-flop is making it difficult to take swing trades and book profit quickly unless you are able to use intraday charts like I did for Dia. Dia didn't move really much on daily time frame, but even that small move was enough for me to book 17 to 20% profit using put verticals. The flip-flop is visible from QH sector industry stock, sector industry stock advanced decline as well. This diagram shows the advanced decline breadth from 1 month to 1 day. As I mentioned several times in previous webinars, these 1 and 2 day periods are, it seems, forever flip-flopping between green and red. And in last few sessions I showed that it was first green and I was showing it was turning red. I expected both the periods to turn to red. I think in the last webinar one period was red, another was not yet red. As of yesterday's close, as anticipated, the 1 and 2 day periods turned red and 5 day, 10 day, 1 month are overall bearish. So my commentary earlier that 1 day, 2 day is flip-flopping between red and green and the weakness is propagating to the higher time frames is continuing to remain valid. One reason I exited my Dia trade with profit yesterday, short trade, as I explained, because Dia was flip-flopping also in the daily chart, because Dia had a weekly trend line support from memory line, and another reason is because I saw 1 and 2 day both periods turn red, And if the flip-flop continues, they are likely to change to green now, and that will erode the profit in dia. So I use the 1-2 day period turning rate to book my profit in the dia short trade. The flip-flop is very evident from the 1 day, 2 day period. That's why it's becoming difficult to trade swing trades profitably unless you are able to change direction quickly or book profit quickly. What about the bucket analysis? If you took all the S&P 1500 stocks, decide where they are within their respective Bollinger bands, put them into buckets 1 to 10. 10 if it is at the upper Bollinger Band, 1 if it is at the lower Bollinger Band, and 2 to 9 depending on where they are. These are 10 equidistant buckets, and then all stocks above their upper Bollinger Band, drop them in bucket greater than 10. All stocks below lower Bollinger Band, drop them in bucket less than 1. Calculate the percentage of stocks in each bucket and draw the histogram. The bucket analysis here is calculated in real time. Now market is closed. It is showing the buckets of yesterday versus 1 day earlier. Yesterday's colors are in deep color, deep green. These lines, this histogram show the stocks that are above the midline of the Bollinger Band, and the red ones show the stocks that are below the lower Bollinger Band, and the lighter colors are that of that of 1 day earlier. So this will be that of 1 day earlier. What you can see from these histograms, darker colors and lighter colors, is that yesterday the green bars reduced in size or area. Visually you can see from this kind of shape it turned to a smaller area. So that shows market weakened under the hood. How? With respect to how the stocks moved within their Bollinger Bands. And the stocks that were below mid Bollinger Band, that area was smaller 1 day earlier. This light color shaded area, and yesterday it increased. So stocks below mid Bollinger Band fell down, stocks above mid Bollinger Band also fell down. That is how you read this day 1 versus day 2 bucket analysis. During market hours it will show real time versus previous day. Overall, from the areas you can see that it is mixed if you look at the darker colors, and you can read that from the pie chart more easily. 48% of stocks are above mid Bollinger Band, almost even, almost 50-50, 48-52. And 1 day earlier, 65% of stocks were above mid Bollinger Band. So that was a significant drop from 65 to 48. 48, so 17% drop. That's a very significant drop. Almost 28, very close to 28. Sorry, very close to 20, not 20 exactly, little bit less than that, but that's a significant drop showing the weakness under the hood. All sectors went down yesterday. Energy was the worst performer, came down by a massive 5.1%. Materials also came down heavily, minus 2.5%. In spite of the infrastructure bill that is being discussed now, materials dropped hugely yesterday. Consumer discretionary also dropped by more than 2%. Consumer staples, defensive sector also dropped by more than 2%. Industrials dropped by minus 1.9%. So yesterday was not only bearish, it was significantly bearish for multiple sectors. Interestingly, many of those sectors are non-defensive like energy, industrials, materials, consumer discretionary, but defensive sectors like consumer staples also dropped, real estate dropped, and even utilities dropped. So yesterday all sectors were down, the non-defensives were down much more. 100% of sectors were down, the 11 sectors. 86, very large percentage of industries were down. 81% of stocks were down. So that was a very bearish view. Now, does it mean it was easy to short trades and make profit? No. Even finding good short trades was difficult. In last two webinars, successive webinars, I looked for breakdown trades and looked for good candidates, but they either did not confirm the move in the bearish direction, or if you took them, you are probably still holding them without booking profit. Let's look at some of them. NIO. I discussed NIO, a Chinese stock, on this day. That time the China market broke down. NIO also broke down. Let's look at the template that shows the historical trend lines. I identified it on this day. That time it broke below this trend line support, and I mentioned if it went down further, we could look for a short trade using intraday time frame. However, it didn't come down, so it didn't have the short entry opportunity. Instead, it displayed the bullish headwind, possible reversal signal, and once again that signal worked beautifully. It accurately anticipated the up move, recovery from the swing low. If you look back, this bearish headwind could catch the very top to some extent, these two as well. Now it has recovered from the latest swing low, but it is still having lower high. If price comes down from here, and if the weekly remains magenta, which it is not, but if the weekly turns magenta, daily turns down, turns magenta, that will give us a trend following growth flow short setup. But as you can see, right after it broke down, it recovered. That is also showing the flip-flop. And this is a stock I discussed, I think, 2 webinars ago. And in the previous webinars, I looked at several breakdown candidates again. JYNT was one of them. I think on this day. It broke down, but it had a lower tail. I think on this day, right? The last weekend webinar, yes. It broke down, but it had a lower tail, so we would wait for next day to see if price was coming down, but it didn't. Therefore, we didn't had any entry in the trade. It recovered, flip-flopped again. MCO, it broke below the trend line support, but barely. We could wait for next day to take a short trade, but that opportunity didn't come. Price moved up, not much, but slightly, showing the flip-flop again. Broke down, then recovered. And lastly, well, I think this is the day when I first discussed it. This one couldn't recover that well. Continuing to come down, yesterday had bearish flow. Weekly also has bearish backdrop. So well is one stock that broke below trendline support after earnings. reverse from trendline resistance and continuing to show weakness, the relative performance tilting down. But that is only one out of 1, 2, 3, 4 stocks. So whenever I am looking for breakdown candidates, they are flip-flopping, so it's not easy. That proves the statement once again. It's not easy to take swing trades and book profit unless you are using intraday time frames, thereby having very narrow stop and booking profit quickly. Now yesterday I shared an idea on my website. After several days, for a number of days I didn't share any trade idea on my website sagarnandy.com because the market was flip-flopping. I myself was not taking many swing trades unless I was using intraday time frames. But using daily, weekly, I was not taking many trades, neither in long or short direction, and didn't share ideas as well. This is the category under which I shared the ideas open to the public. Yesterday, I shared an income strategy. It is a known strategy, that is to short the put on fundamentally strong stocks that you don't mind holding if they come down, but you would like to buy them at a lower price. And these are the stocks that I identified. Let me show you the snapshots first that I shared yesterday. ANF, GM, BGFV, AXL, and BKE. What was common for all of them? Fundamentally, they are all undervalued with extreme high earnings growth in the last quarter, more than 100% year on year quarterly earnings growth, and even for the last 3 quarters it is mostly green for all of these stocks. High earnings growth. Last quarter also had very high revenue growth, and all of these stocks are under accumulation by funds. So fundamentally they were strong. However, yesterday, and this I could see in real time in QVital, all these stocks came down heavily. Then I looked for the technical charts to see if any of them were near trendline support, memory support. Then I could look for shorting the put. Because of the heavy drop in real time, the puts would be very expensive, and I wanted to use that factor in my favor. Their industries also were weak. I showed it here. The industries turned weak yesterday, and to check that even in spite of the industry weakness, if I find a stock near trendline support, could I short the put and make a profit in a few days? We'll see that. Not sure if you could follow the post and take action accordingly. Now, out of these stocks that I dropped in Q Elite's radar, Station radar, they were down significantly, and two of them came down and touched the trend line support. So I asked a question in the post that if you wanted to short the put in any of these stocks, which one would you favor over the others, if any? And the answer would be, using Q guidelines, is probably to favor these two more. The others also had support nearby. I shared all of them with that in mind, but specifically these two, BGFV, Big 5, and AXL, they had touched trendline support. So if I had to choose only one or two, I would have chosen these two based on technicals. Fundamentally, they are all very strong. Now let's look at all these stocks. ANF came down by 10.7% yesterday. there is no support nearby, the next support is at the white direction line. So in this case, if I wanted to short the put, I would not try to short the put at the money. I would have shorted at the white direction line, expecting that to hold. And if not, at the worst case, I would have bought the stock at a lower price, not at the white direction line, below that effectively, because I have a significant premium selling ANF yesterday, if I did that or if you did that. So in this case, if you wanted to short the put, the way I would do that is to short the put at the yellow, at the white direction line, not at the money. GM, General Motors, it announced earnings and dropped, stopped right at the trend line, stopped right at the watermark support, where bullish headwind came earlier that accurately anticipated a price reversal. Now it is back at that level. Huge drop after earnings, though the earnings was not very bad. Earnings was quite good in fact, but it dropped. So you could in this case short at the watermark, but I prefer to short either at the trendline support or somewhere below the price. Not or, I should rephrase it. I prefer to short at trendline support and I prefer to short below the current price. Why? Because the further out of the money you go, the put options become more volatile. So you get higher premium. Not in absolute sense, but because the volatility high, those are out of the money. People are just paying for time value, and the out of the money put options have higher implied volatility, higher price. That's why I like to short the put not at the money but below the current price. And here the logical place would be to short at the white direction line, not at the watermark support. BKE, this is nice, isn't it? Had a sharp drop, very nice trend line support in weekly and daily. In this case, you could short the put at the daily trend line support, so around 40. Not 40.5 at the money, but around 40. Or if you had a reasonable premium, you could go to the watermark support, but I would be happy to short the put at trend line support because it is there in both weekly daily, and as we have seen many times, the supports hold quite well. Lastly, another two that touched trend line support yesterday. One is AXL, earnings here shown by this dollar symbol. Sharp drop after that, stopped right at the trend line support. In this case, you could short not the immediate trend line support strike, but the next trend line support price. Little bit below the closing price yesterday, so volatility would be little bit higher. Or if you wanted, you could short the watermark support as well. Or you could short the next weekly trend line support as well. There were multiple choices here. And as I mentioned, if I had to choose only two of these five stocks for shorting the put, I would have selected this one, AXL, because it touched trendline support and stopped there. And the other would be Big 5, BGFV. Sharp drop, stopped right at the trendline support with a long lower tail. I prefer to short somewhat out of the money. So you could short at the 20 strike, that is at the watermark level. You could go to the next trend line support, but I think the premium would be very small. So a logical place probably would be the 20 strike, short the put. Now this is income strategy. The maximum you can gain is the premium you get by shorting the put. And if you are using 44 days to expiry, you may get the full profit only at expiry. As far as time efficiency is concerned, that is not the most effective approach. A better approach is to book profit at around 50% of max profit. And instead of waiting for 44 days, you would see it reaches that 50% or around 50% profit in a week or so if you traded it correctly. Not all the cases, not all the times, but when the trade works well, you will hit 40-50% profit within couple of days. Don't have to wait for 45 days to get the full money back. And once you close the trade with profit, you could then open another trade. That is an income strategy, and this works well when a very strong fundamental stock that is also under accumulation by funds drops suddenly and stops at a predefined trendline support or watermark support. That is what I shared yesterday. I am not going to look for new long or short trades. Today market is continuing to be in a flip-flop. Let's wait for it to be more clearly directional. Then I will start to share more directional trades. I will share them in the next YouTube live sessions, and also, as you know, I shared them on Twitter page and on my forum as well. I still have 10 more minutes. We didn't look at few things. Let's look at that. Finder, the balance between bearish and bullish technical signals or technical breadth. First, the weekly finder, very clearly bearish now. 71% of all signals are bearish. Strength signals are bullish, but as I mentioned many times, bullish strength associated with bearish reversal, together they become bearish. Trend continuation signals are also bearish. There is no alert from the weekly bearish headwinds. It is not at 2% level. But in any case, the overall technical breadth weekly period is bearish. If the flip-flop continues, it will turn bullish again. And the daily period, yesterday's signals, it's even more bearish. Even strength signals are bearish. All signals, strength signals, reversals, continuation signals, everything is bearish. If flip-flop continues, it will turn bullish again. What else to look for? Let's do the same exercise. I have 10 more minutes. Let's do the same exercise I did earlier to see the stocks that broke down. 262 breakdown stocks yesterday. Let's flag them, and I am going to look for alternate signals. So I am positioning my cursor on this symbol header column and clicking the lookup alternate signals. These are all breakdown candidates, and I'm looking for alternate signals. Why? Because I want to look for bearish momentum. I want to look for MOBO breakdown from a squeeze with a kahuna. Now I am left with 45 stocks. I don't want to look at 45 stocks, so I'm again going to place my cursor at the header column for symbol and going to do a peer analysis using QVital. Let me do that. That brings those stocks. What are those stocks? These are the stocks that are breaking down below trendline support and they have bearish momentum. That is, they are breaking down with MOBO breakdown from a squeeze with a bearish kahuna. And I'm going to look for weak fundamental stocks. Let's start with Crown Jewel, none. 3 star, 1. CASY. Why 3 star? Because it is overvalued with negative earnings growth. Funds accumulation is neutral. Let's look at this stock using technical charts. It broke below one trend line support, but there is another trend line support nearby, and it is moving inside a narrow range. So not able to short it now. Close, go back. Let's look for 1 star. Several stocks came down. Why 1 star? They are either overvalued, valuation in magenta, or they have negative earnings growth, one of them. Weak either in terms of valuation or weak in terms of earnings growth. Let's look at these few stocks now. It broke below the trend line support. This is HC80, but it is moving sideways and it is at the lower edge of the sideways range. Also has the yellow direction line. If the sideways move continuous, it will go up again. Not giving me the confidence to short right now. Close. Next one, FWRD. In a triangle pattern at the lower edge of the triangle, and if you see last couple of days, weeks, is flip-flopping. It's a bearish candle, bullish candle, bearish candle. If the flip-flop continues, I am expecting a bullish candle now. Bearish, bullish, bearish, bullish, like that. So again, not giving me the confidence to short. Very much flip-flopping. Close. This one is looking better. Purple Innovation, PRPL. It was already in a downtrend, tried to recover from the swing low, which displayed the bull release signal, created a lower high. So the downtrend was intact, and yesterday it broke down below trendline support. Bearish flow. Did it have weekly bearish backdrop? Then it would have given a go with flow short setup. Let's check that out. PRPL. Let's give elite for that. PRPL. No, the weekly backdrop is not bearish, so it's not giving a go with flow short setup. It could be taken as a breakdown trade setup, but there is no bearish pressure and volume is almost nil. Almost is very small volume. So this is not giving a clear Q trade setup. I like to take breakdowns with either bearish pressure or high volume, especially in the current market situation where it is flip-flopping. Though there are several momentum signals, as I selected Mobo breakdown from a squeeze with a kahuna, biggest drop of 1 month. If at all I had to choose any of the stocks I went through so far, I would have chosen PRPL, but not really now because there is not enough pressure. Just having the momentum in the alternate signals is not enough for breakout or breakdown trades, especially when the market is so up down up down. It's better to have high pressure or high volume in your favor for breakout breakdown candidates, but that's not true here. Let's see the remaining stocks. TSLX broke down below trendline support but has a long lower tail, so it's not giving me a shorting opportunity. Close. LANC, this is looking better. It was moving sideways, had a trendline support, also support from the yellow direction line. It broke down decisively. Let's look at this using the 3 chart template. LANC. Very decisive breakdown from a sideways range. Backdrop is bearish, very bearish shape in weekly. High bearish pressure in weekly, high bearish pressure in daily, though the volume is very small. The momentum signals that I looked for in Finder: Mobo breakdown from a squeeze with Kahuna, biggest down move in 3 months. Only challenge with shorting a stock like this is that it has already moved down a lot. Where to put the stop? Logical stop would be at least at the high of this candle, maybe even at the high, at above this trend line support that is broken now, but both of those stops are far away. It is already at the lower boundary. Already it is oversold, shown by the stretch band indicator. So shorting it will be risky. In this case, if I had a long position, I would be very careful, but shorting this using the daily time frame will be risky because the stop is far away. Not the optimal shorting one. Next one, TILE, T-I-L-E. This broke down below trendline support but barely. Not giving me the confidence to short. We could look it up using 3 chart template. TILE. Bearish flow. A breakdown below trendline support but not a very decisive breakdown. Weekly backdrop is bearish. Also weekly has a reversal signal. Bearish pressure in daily, high volume, following a high volume up day. So high volume up day in decisive shape candle, and immediately after that a high volume very bearish down day. So that may be a stock. Once again, if you are holding TILE long textile stock, you may be careful. But the breakdown is not so decisive. It has biggest down move in 3 months. Mobo breakout, Kahuna. So reasons to be cautious, but not a very decisive breakdown. Some of these stocks you may try to short using intraday chart. Using daily chart, I am not finding any. Those are all the stocks. So as in the previous 2 sessions also, this session also, in spite of a very weak day in terms of technical breadth, in terms of sector, industry, stock advance decline breadth, I didn't find easy shorting candidates. And when that happens, that's a way of Q systems telling to wait for better times, not take risky trades right now. We are at the 1 hour point. Let me end today's session. Thanks a lot for attending. I look forward to seeing you in our next session, which will be during the weekend. I'll announce the time on my Twitter page, and if you are subscribing to the YouTube channel Trading Profitably, you will get notification from them. Thanks once again. Have a great week and trade profitably.